Hello, ladies and gentlemen. Here is the Micromind. That's the final video. Sit down and think. The final video in the cycle. So today I will talk a little bit more about psychology, a little bit more about typical mistakes, and about my mistakes. Well, I've already mentioned those in the previous video, but still, how did I overcome it? Let's say that. And how did I return to the market? Because there were several of this, several at the end. I will tell a little bit about gold, but today, yeah, it will be more about, like discussing and thinking, and it's basically the retrospective. So let's get it started. And first thing I want to start with is our 15-point checklist for those who can't stop. And yeah, to stop, it is, I think, is the most important for trader. I mean, analysis and all this stuff like, fundamentals, technical analysis, your knowledge, of course, it is all important, but if you can't manage it properly, you will lose eventually. Anyway, you will lose. That's pretty simple, and you will continue spending money, and you will say that, well, that's for my learning. But no, if you don't come to any conclusions, then it means that you just sprayed the money and just lost them. You didn't invest it in your time, you didn't invest it in your knowledge and experience. What are actually the most common mistakes among the traders for somebody is when the trader is feels that he is tilted, and but he can't recognize it, and he is like kind of a little bit of maniac, and just trying to make more and more and more trades in order to regain the money back. Doesn't work. If you feel yourself tilted, close the terminal, go for a walk, or do whatever you want. Nothing should remind you about the stock market, about the forex, about the market in general, at least for several hours or maybe even days for somebody. As I mentioned in the previous video, I like to play games, and for me, the best game to kind of relax and forget about everything is the Civilization 6. Yeah. Also, still, we are in the market. Psychology plays huge role, and we have two feelings in the market. It's the fear and the euphoria, and you shouldn't be subjected to any of these feelings, because when the market like goes down, it dumps really badly, and you think, well, it ain't gonna recover anymore. Historically, you see that it recovers, and even here, when we had all this dump in gold, it recovered. Not 100% recovery, but still, it is a good recovery, and yeah, it's a month, only month. And even here, when we had this euphoria, don't be euphoric. If you see that the market is going crazy, everyone is telling you gold, buy, 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 or any other instrument, you may substitute it with anything that you like more. You shouldn't be subjected to this, of course, because it is emotions, okay? The market is not about emotions. It shouldn't be about emotions for you. The market should be about the plan, about really nice plan. You have to think, what are you gonna do if this situation happens or this situation happens? How will you manage your money? That's the most important thing. And here I also liked it. If somebody tells you to trade, you shouldn't. And sometimes, trading is not good if you are doing it as a regular. Um, no, because you are human. You are not the trading machine. You are not the algorithm. You may feel yourself tired, and when you are tired, your reaction doesn't go really well. Your brain doesn't work really good, and etc., etc., etc. So you may actually make a really bad decision, and you will regret it, and you will try to regain money back, and you are just collecting all these mistakes. Um, you have to experience your execution, your trade execution, because sometimes when you have a good plan, you mm, look through the technicals, look through the fundamentals, and actually you read the market really nice, and your prognosis was right, but your execution was terrible. What I mean is that you are you are not sticking to the point when, for example, it's better to set some limit orders, okay, but you are buying the market, and if the market goes higher, the more it goes higher, the more you are, uh, the bigger position you have because you are buying, 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 especially at the maximums, at the local maximums you are buying. So you are stretching uh, your position, you are stretching your price where you entered to some high points. You shouldn't do this because you are losing the profit. And in case the market goes the opposite direction, you will not take such profit as you could. Okay, the same with if the market goes downwards. Yeah, but anyway, it is the market, and all of us we are learning, and it's really hard to predict what will happen next. And sometimes you are making mistake because of the prognosis. The prognosis was not really good. Uh, you didn't think about some details. Sometimes the trade was bad because of your psychology, and you lost your money. That also happens, and you shouldn't be mad at yourself. Just remember that. Uh, you should tell to yourself, well, this happens, and this already happened, and you should forget about this. You should forget for some time, not forever, because next you will have to make your homework and figure out what mistakes you've made. Yeah, but at the moment, if you understand the situation goes really wrong and you can't explain to yourself why, um, the best decision, especially if you have some profit, to go away. I mean, close the position and go away, or just close and observe. Because if you were a little bit scared and you left the position, you left the market and you observed, but it was just some minor correction and it's basically the false warning. Okay, that's one option. And another option could be that you wait for the reverse, and the reverse didn't happen. And now you don't have any profit, you have losses. So manage your risk management. That's the most important thing. Also, yeah, somebody use static stop losses. Somebody use the trailing stop. Trailing stop is not so bad. I mean, mm, you have to think about the volatility, of course. You have to pay attention to the volatility because sometimes the asset may be too volatile and it triggered your stop loss and the asset went further. I mean, the direction that was desirable for you. So you have to figure this up and don't look at the graphs every 5 minutes. Please no, because you have to be really proficient, okay? You have to be really experienced in order not to make the market push on you. Because if you observe your position every single minute, every second, um, especially that's for beginners. It is gonna end bad for you. I mean, you will notice the things that don't exist. You will, what I mean, you will see some signs of the market of potential reversal or potential opportunity, but that's all wrong. And don't use 5 minutes and 15 minutes and 30 minutes. I figured out the best trading strategy for me. And the best trading strategy is I'm using time frames 1 hour, 4 hours, daily, weekly, even monthly sometimes. It depends on the horizon that I am planning. And for most of the time, I hold my position from several days to several weeks, even, because this helps me not to react on the volatility in the market that goes like, just at the moment. Okay. If we're still in the trend or if we're still in the range, that's fine. If something goes really sharp during the trading day, that shouldn't bother you. Yeah, and also the longer the horizon you have, the better risk reward you will have because you shouldn't count many details, many events that happen during the day. You should take into consideration only more fundamental factors, uh, more long-term trades. It's better. Yeah, I think that's all from me. Yeah. So the results are the following. Don't blame yourself, of course, because it happens. It happened. It happens. It will happen all the time. All of us, we make mistakes, and that's okay. We're learning, we're human, and we work in really not determined sector. We're working in completely unknown sphere. It's trading. Manage your risk management. That's what I'm telling you guys all the time. You should manage it because that's also important. You should work on your risks, and the profit will come to you eventually. You should, what else you should do? You should become more proficient as a specialist, as a trader, as an analyst. Yeah, and also train your psychology because trading is not the place where you should behave as you behave in the normal life. If everyone is running out, you should ask yourself why everyone is running out. Maybe that's a good opportunity actually to buy it. Um, for most of the time, crowd is not right. The crowd goes into the asset, buys it at the very peaks, and sells it at the very lows. And you should do exactly the same, where you have the euphoric in the market and everyone is happy and everyone is buying because it will grow more and more. Remember, this is the time when everyone is telling you to buy. You should sell it. I mean, you may not sell it just, like everything at the moment. You may start to sell it. At least you will have your money and you will have a good profit. The most you can do is that you will sell at the very highs and then you will rebuy it from some fools that will be selling to you at the lows. Yeah. Psychology, risk management, don't blame yourself, become more proficient. Okay, that's um, that's the first part, and the second part about the gold. Let's talk a little bit about it. So, what will be with this precious metal, from my perspective, in the nearest, well, actually, in the midterm. The midterm, maybe it's gonna be like 6 months, maybe even a year, maybe even more. Well, for now, of course, the metal is really, really. high. I mean, you know, 2000 from the beginning of 2025 grew massively. Why is gold not growing amid the Iranian crisis? Because at the first glance, we had the geopolitical tensions, and mostly gold is growing. Everyone expected that gold would rise in price, but this didn't happen, and now some investors are experiencing acute frustration because of this, or even selling off gold shares of gold miners. They say it didn't work, and from short perspective, maybe, but if you take a look at it like in the long term, it is actually really funny. And the surprising thing is that it's not that gold is not growing now. The surprising thing is that gold is not falling now. And so here's why. Gold is a reserve that is printed out when something goes badly wrong. Currently, almost all countries that are major buyers of gold in their reserves are in such a position that spending money on something other than urgently buy oil, petroleum products, and or fertilizers is almost an economic crime. Perhaps some countries who are poor will even sell or are already selling, and we just don't know about it yet, their gold in order to urgently buy oil. So the amazing thing is that despite this apparent reduction in demand for gold, the price is holding up very well. The most interesting part will come later. Let's think about it. Which method is currently, over the past 20 years, the most popular among Western and not only central banks in the event of a recession or even more so, an economic crisis? Moreover, this method is used regardless of the genesis of the crisis or recession, both to combat the COVID recession and to combat the crisis of 2008 2009, and to combat the sovereign debt crisis of the European Union. The same method was used. The dollar rate, or the euro, or the pound, it doesn't matter, sharply goes down, and the printer, the quantitative easing, is running at full capacity. In the short term, the Fed, the European Central Bank, and other central banks may indeed try to combat inflation due to rising oil prices because you may see how sharply the oil grew over the, well, it is so Monday, yeah, so over the last 2 weeks, how sharply, more than 2 weeks, how sharply the oil grew. And that's really painful for the Western economies for sure, especially for those who are importing rather than exporting. So the ECB and other central banks, they may try to combat this inflation by raising interest rates in order to reduce the level of demand in the economy, so to make it more deferred before the oil issue can be somehow resolved. But if the economies of the United States, the European Union, and etc. will fall into the recession, then everyone will ignore inflation. For example, we may see the COVID recession and Biden stimulation from the machine, and all these countries they will turn on full fiscal stimulus from the printing press, and they will cut the rates. So, what happens to the price of gold in conditions of massive monetary inflation? And finally, one of the reasons for the growth in demand for gold in recent years is the sharp decline in confidence in the United States and West-centric financial system. And the recent escalation between Iran, Israel, and the United States, I don't think that it gives some credits to financials to the Western financial system. And many countries, first of all, the BRICS countries, they are already some of them were thinking, but most of the countries are already making the alternative ways to trade with each other and not to use the US dollar. And for them, gold, it is, and all of these countries, they were buying gold at first. And what I think is that we will not see any sharp decline. Maybe we will see something, some reaction on the DXY for now. And well, the DXY already grew up and it's at about 100, and it may grow a little bit more, but I don't think that it's gonna be like for a really long time. Yeah. So basically that's it. These are my insights on gold. These are my advices to the traders, my basically my experience. Yeah, thank you for watching this. I hope it was useful, and see you soon. Bye bye.